Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Stephanie Roth walks in, and it's really wicked cold in here, folks. I like it that way. And the whole room heats up because she's working the terminal.
Sure.
Like nothing. What do you see over there in the terminal, Stephanie Roth, of this inflation report, this shock?
It certainly is a shock. I think the main thing that we have to remember is there is a lot of error in this report. So I would not take much away from this. A key thing that there's an issue with, in the sense that when they're sampling the data, specifically around November, that the survey period was condensed into later in the month, when you typically have significant holiday discounting. And when we spoke with BLS, they said they're not doing anything to adjust those seasonals. So that automatically makes the data artificially weak, and we're probably going to see a bounce back in December.
Is there a trend we can take away from here that, boy, it's at least inflation is not going up from here? Is that a fair takeaway? Maybe it's not cooling as much as these numbers might suggest, but it doesn't appear to be rising?
I think that's entirely fair.
Okay.
That there was this concern that around the holiday season, companies wouldn't really do the typical discounting that they usually do because of the tariffs. That doesn't appear to be the case. And we knew this heading into the data print, because if you looked at a number of different indicators that survey the companies ahead of this holiday season, it showed a normal holiday discounting year. So it doesn't appear like there was this lapse in discounting just because of tariffs. In fact, it was a typical year for discounting. And then on top of that, you have some of the issues within the data because of the government shutdown.
So Myron's been out here, Governor Myron. We got to lower rates. A whole bunch of other people. There's been a clear tendency within Bloomberg's surveillance of people looking at a disinflationary tendency. Is it a January tendency, or is it a Fed meeting waiting out midsummer?
Yeah, I think what we'll see is inflation will bounce back in the next couple of prints. The economy will start to pick up again, in which case the Fed's probably going to be on hold for much of the beginning of next year.
So again, the Fed, if you look at, so you don't think the Fed's going to look at these numbers and say, we've got inflation?
I sure hope not.
You sure hope not, because you think the data in the next couple of months could in fact show a little bit more inflation in the economy.
Yeah, and we know that there was an issue. They didn't even collect the October CPI for the most part. We know that there are issues with the data.
Yep.
So to form a strong conclusion about this print in particular as being some massive disinflationary period, I think is entirely inaccurate.
Stephanie Roth with us with Wolfe Research, and we continue here. Paul Sweeney and Tom Keene with Lisa Mateo and John Tucker. Good morning across the nation. Sirius XM, Channel 121. Good morning, Canada. I mentioned David Rosenberg up in Toronto with a disinflationary call. Nailed that into this report. On YouTube, subscribe to Bloomberg Podcast. We're thrilled to finish 2025 strong, humbled by the signups there each and every day at Bloomberg Podcast. Paul Sweeney with Stephanie Roth.
All right, so we've got an inflation environment that's at least okay at this point. How about the labor market? What did you take away from some of the labor data earlier?
Yeah, so I think what we're seeing is a labor market that's holding up a lot better, and in fact starting to inflect a bit higher from here. And I think that's the main conclusion that we should take away from the headline jobs numbers. Let me rephrase it. The private payrolls numbers. Okay. The headline jobs numbers are impacted again by not necessarily the government shutdown in particular, but the deferred resignation program, which ended at the end of September. These are people who took severance packages. This is not people who lost their jobs. So if you look at the private payroll numbers, they were actually quite decent. Now we're looking at a trend that's close to in the 70,000 range, which is really not bad. And the fact the unemployment rate rose is less of a concern, I think, partially because there was, again, some issues with the government shutdown impacting the data. And then in today's inflation data, the airlines were a big driver of the weakness, and that there was also canceled flights. There was just a lot going on in the print.
So your first look at the noise is the airlines.
First look at the noise is the airlines. They fell 6.5% over 2 months, so it comes out to about 3% each month.
Right.
If you look at the core number was 0.1159 across both months. That's quite low. Apparel was was pretty weak. That is probably tied to this whole holiday discounting issue. So there's a lot of sort of noise within the report, in part tied to the government shutdown, and part tied to the fact that it's just a sort of less inflationary backdrop than
Stephanie authorized the market higher. Futures up 40 now, up 47. NASDAQ up 1.3%. The NASDAQ 100, I should say, the VIX 16.83. You know, I look at this stuff. I look at the whole ballet of it all, and I am more than certain. I learned this from David Rosenberg at Merrill years ago. Merrill Lynch, Pierce, Fenner, and Smith. I saw an article that it's just Merrill. I said, it will never just be Merrill. You just mentioned it. The pros like you look at each line item. What do the service sector line items say in the angst of affordability and purchasing power? Utility bills, medical bills, the auto insurance. Can you see those in the report?
Yeah, we can see that in the report. Motor vehicle insurance looks pretty flat. Transportation services, lodging, all of that stuff was pretty soft. It's hard to know to what extent this is government shutdown related. My sense is it probably is, and we'll see a bit of a bounce back. And then on the good side, that was all pretty soft outside of maybe some used vehicles.
Fed pick. What do you think?
Ooh.
Who should it be, or who do I think it will be?
Let's go with both. We have time for both answers.
I would love to see Waller. I think he'd be a great pick. And I think markets would really prefer to see Waller. Who do I think is more likely? It's probably more likely to be Hassett. Although it does seem like incrementally over the past couple of weeks, there seems to be some more concerns about Hassett, or at least more hesitation out of the White House for picking him.
Stephanie Roth, thank you so much for joining us. Your commitment to surveillance is appreciated, of course, with the Fed decides and other great moments. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We're going to go to Emily Roland right now. She is with John Hancock, and I just can't say enough how with Manulife, she has just said you have to participate. First of all, congratulations on the last 3, 4, 5 years. You've just absolutely killed the common sense nature of just own quality stocks. Any variance for next year?
No, Tom. I mean, we have long recognized the fact that over time, stock prices follow profits. It's pretty simple. The challenge, of course, this year is quality's honestly been left in the dust. This year has been all about momentum. It's been about technicals. It's been about finding a chart that's going up and buying it.
What does it signal to you that they've been left behind?
Well, it just signals that there just has been a sentiment-driven market, whether it's political sentiment, whether it's sell U.S. dollars and buy everything else, whether it's embrace Europe. I mean, look at things like Spain and the Kospi this year. They're both up 80%. They are trading not like companies, but almost like ticker symbols. So we've seen investors really be driven by sentiment. We've been getting out our old like technical investing textbooks from years ago to try to figure out what's going on. But I think there could be a bid for quality as we head into a trickier year in 2026.
Some concerns out there about a bubble around this whole AI story, broadly defined, and maybe just not in those 7 names, but maybe more broadly in the market. How do you think about that?
Yeah, I mean, there's no doubt about it. The valuations are elevated around 22.5 times forward earnings. Of course, the peak historically was 24. But what we're really focused on is the denominator of the PE ratio. It's earnings, and the earnings engine in the United States is on. We have a lot of tailwinds into next year. We've got the provisions from the One Big Beautiful Bill. We've got energy prices close to support here. That helps consumers. So there's a lot going right for corporate America.
Okay, inflation comes in lower.
Yeah.
And your entourage came in, I don't know if you saw the report, but, way under 3%.
Yeah.
Let's say we get a Fed cut this time, whenever, maybe when the Red Sox finally enter the free agent market. Whatever. I'm sorry, money market funds, Paul, at what, 3.6%?
Sure, yeah.
They're going to be 3.5%. What does the John Hancock Manulife Research of the emotion of money market funds coming down.
There is a love affair with money markets. There's $7+ trillion sitting in cash right now. And we think that those yields could disappear before your eyes into next year. The bond market is just not sniffing out the disinflation that we see coming from the housing market. Just this morning, looking at the CPI report, it was still like Groundhog Day. It was like the shelter component was still driving the bulk of the gains in CPI, even though we're at the lowest level since 2021. The labor market's got more cracks in it than I would suggest the official data is telling us. That means bond yields lower. There's an opportunity right now to lean into the income that's available in high quality bonds. Investors won't do it. Our work suggests that people buy money market funds en masse until rates are zero. We don't want that to happen.
Paul Ashworth, Capital Economics publishes, I love it.
Yeah.
I've never seen this, folks, in umpteen years. BLS reports hard to believe slump in inflation.
Yes, exactly.
Ashworth needs more data.
Exactly right. Earnings. Earnings have been really solid in the last several quarters here.
Yeah.
Are they strong enough to support this market going forward, do you think?
Yeah, analysts are penciling in 14% earnings growth for the U.S. next year. That is pretty lofty. But as I mentioned before, there are a number of tailwinds in place for corporate America. I would say, just building on the America theme, we have the best earnings growth of any companies globally in the United States. You've seen that not be rewarded this year. The S&P 500 up around 15%. European equities are up twice that amount. Guess what their earnings growth is? It's low single digits. So what we've seen again is this sentiment-driven trade bringing it over. European financial stocks are up almost 60% this year. Their earnings growth is low.
For a decade. I mean, in your shop, with your track record, what's the minimum timeline our listeners and viewers should use? To me, it's 3 years. The media doesn't do that.
Right.
I mean, Sweeney's out at 7 years, but the answer is the short-termism is unreal.
Well, that's fair. But if you look at the economic growth picture, the macro is like on a different planet from what's going on in these markets. The U.S., from an economic perspective, is kind of like the cleanest shirt in the dirty laundry right now. If you look at Europe, the data are coming in. I mean, PMIs, for example, for the Eurozone at 49.2, it's okay. But it's not, I don't think it justifies a 30+% return in Europe, an 80% return in Spain. Right. I think these markets have run a lot and need trim into strength into next year.
I'll get one more.
What do you do with dividends? Does that play with you guys at all? Or
I like anything that has like the word income in it for next year. I think income over capital appreciation. The problem is that the dividend yield on the S&P 500 is 1.2%. right now. And the fact that you can get 4 to 5% in high quality bonds, I like that a bit better.
Okay, but with the view of Trinity Church from old and new John Hancock, Emily Roland and Tom Keene worshipped at the altar of Margit Patel. Yeah. To Paul's great question, is dividend growth an alternative to yield?
I think so. I mean, again, we like this kind of relative value play, and I think you're going to find those dividend growers in that bucket. It's value and quality at a reasonable price.
What in God's name are the Red Sox doing? I saw Bregman.
What about the Patriots? We're 11-2. Drake May, he's going to unbelievable.
Are you in the Manulife John Hancock seats at the 50-yard line?
Yeah, right. Those are for the clients. I wish.
Emily Roland, thank you so much. You should see their Red Sox tickets. It's just sick.
They've been there.
She's with the John Hancock Company. I should say Manulife John Hancock to do it correctly. Emily Roland, and she has been dead on about participating in the market. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We have a special treat for you folks. I want to frame this out as well as I can. You've got a really odd headline this morning of breaking news. I'm going to go right to the Bloomberg where we've got Trump Media to combine with a company you don't know, TAE, to build nuclear fusion business. My family goes back in this derby over 40 years to the Lawrence Livermore lab, and Paul, the endless quest to squeeze 2 atoms and two nucleus together. Dan Ives is quite good on this. We're going to talk to him with Wedbush about this combination before we talk to him about the state of Mag 7 and technology as well. Dan, thank you so much for joining us on short notice. I go back decades on this. Fusion has been a hope and a dream forever. How is Donald Trump going to finally get us over this fragile line of successful physics?
Yeah, I mean, look, I focus more like with TAE. I remember their backers because I know them from a fusion perspective. Google, Chevron.
Google and Chevron have been their two major recent players.
Yeah, I mean, Goldman, some others. Look, I think when it comes to nuclear fusion, that's 25 plus years. In terms of the Maxwell winners, the Nobel winners that they've had here. So I've always viewed this is going to be. If there's a winner in the U.S. and global nuclear fusion, it's TAE. So I think that's at the centerpiece of this whole deal. It's much more about TAE, in my view, than in terms on the Trump angle. That's obviously the political backing.
Is this an arms race, if you will, a fusion race with China? We saw what they did with electric vehicles. You're conversant in China and AI, the NVIDIA chip debate in that. Is this like getting out in front of China, catching up on nuclear fusion?
That's what it's all about. I mean, I think, me and you've talked about this and, on the show. This is an arms race versus China. I mean, everything that they're focused on is going to 2030, how they fuel AI arms race. Technology, U.S. is way ahead of China because of NVIDIA, because of Microsoft, because of Palantir and others. Energies are scarcity. Like I've always said, energy is going to be the big scarcity. Nuclear has to be the play. Obviously there's ACO and others, but this will clearly be the first fusion public play.
So, Dan, I think most people understand the Trump media company as a media play, a digital media play, if you will. Can you tell us about TAE? Because most of us don't know a whole lot about TAE.
Yeah. And again, TAE, I think, is the centerpiece of the whole deal. I mean, even though it's a merger, it's really about TAE in my view. I think, look, when you look, this is 25, 28 years, mostly out of California. They've built, I think it's about 5, what I'll say successful fusion build outs. This is one, I think it's 5 Nobels, so many Maxwells, in terms of from scientists that have been through there, Schwab backing, it's kind of who's who in terms of they've had backing. But this has really been one coming out of the Cal system, science community. And that's always what it was known as. It was always sort of a gem in the science community.
Yeah, I noticed Jeff Immelt was a former board member, but with TAE folks, to see Eugene Monet's there, who's just absolutely definitive across all political lines of America. Dr. Money's, of course, associated with MIT. Let's say, Dan, as a statement, TAE has a heavyweight board, but you got to get something done. Going back to Lawrence Livermore Lab ages ago, it's a lot of theory. It's a lot of politics, including the ADVANCE Act, accelerating deployment of versatile advanced nuclear for clean energy. It sounds like an episode, Dan Ives, of Get Smart, except you're too young to remember Get Smart. But the answer is there any indication fusion will work?
Oh, I think that's you don't do this deal if you don't think this is going to work. I mean, if you look what TAE's done, it's not just, I think, the best bet from a U.S. perspective and even global relative to energy. And clearly, there have been obviously so many starts and stops when it comes to fusion, but I do believe this is one where when you look at breakthroughs combined with what you'd get from a capital perspective, because we've always said that's part of the arms race, that's why this would be such a unique combo.
Paul, this is great. I want to thank the Kleinman Center for Energy Policy at the University of Pennsylvania for getting me up to speed on this. They got a chart in here from Sorbonne, 1915, a proposed power plant. It looks like the set a silo.
Right.
I mean, that's if I did Landman in hydrocarbons, the fusion thing looks like the set a silo is what I put it.
Dan, from TAE's perspective, why are they merging with President Trump's media company?
Well, I think probably two reasons, right? I mean, one, capital. I think Trump, you look at $2.5 billion cash. and Bitcoins or capital you get right away if you did this, right? As opposed to if it just merged into just a regular SPAC, they'd have no capital. So that's one. And obviously it's political backing, right? I mean, implied relative to Trump administration, it's essentially kind of them picking the winner, more or less. And I think that's how it'd be viewed.
Dan, let us migrate over to technology right now. Of course, it's a day-to-day thing. My book of the summer, I think a year ago, 2 years ago, was Chip War. It was just a fabulous book. And Chip War showed how discrete and apart Micron of Idaho is. They're really, really good at making simple technology, simple semiconductors and such. Dan Ives, what did you glean from the Micron optimism we saw yesterday?
Look, I mean, you talk about like the right news at the right time, relative to nervousness, Oracle data center, and obviously a lot of the worries about the build out. Hey, look, that is just further validation, demand and supply, 10-1, right? 12-1. It just shows what's happening in terms of these AI build outs. And of course, NVIDIA and AMD and others, but Micron is obviously front and center relative to, what I kind of view as the core sort of, barometer relative to these AI build outs. And I think that's investors are going to view this. And I think this calms some nerves, especially given where we are with the lack of news relative to companies coming out.
To me, Paul Sweeney, that's the huge thing here. You've experienced this too, the lack of news. Paul, Micron, the last 10 years, it's just appalling. 33.2% per year.
Yep.
That's with the recent
amazing.
moonshot up.
Hey, Dan, just with this deal with TAE today, just highlight for us again kind of to what extent will power and access to power and the grid be maybe a headwind for this AI rollout and development?
Well, I mean, today, 3% of companies have gone down the AI path. When you get to 20%, you don't essentially have enough power. So obviously right now in terms of like grid, solar, that's going to be sort of important in terms of stopgaps. But to me, the only way you get there is nuclear. And like I've said, like nuclear has to be the answer, and you have the clean energy, right? When it comes to fusion, like this is going to be the bet. You got to make big bets quick. And obviously TAE, in my own view, like in the US, that continues to be probably the best bet we have.
I have real trouble with this, Dan, because I've seen decades and decades and decades of, we're going to do it, cross our fingers, hope to die. We're going to do nuclear fusion. In your research, I mean, people don't realize this, but away from the camera, Ives actually works.
Sure, yeah.
Do you see imminent research where someone at Google in physics can say this stuff is going to work?
Yeah, I mean, look, I don't think Google, Chevron, Goldman, and I think many other tech players that have looked at this company, they're not doing it if nothing's happened. I mean, I truly believe they've had breakthroughs, which is what's unique after obviously decades and decades, like you've said, coming out of labs of the theory, but not actually being able to scale.
Dan Ives with us with Wedbush. We continue here this morning. We welcome all of you across the nation, around the world. Good evening on the Pacific Rim, a place where Mr. Ives visits often. Good evening over to India as well. Tom Keene and Paul Sweeney.
Dan, what's the, as you think about 2026, and you travel a lot meeting with institutional investors, meeting with companies within the tech space, what's kind of the number one talking point for 2026?
I think it's monetization of AI, right? In other words, it's the build out. What do use cases look like, not just on the enterprise and on the consumer side? And it will get to a race, right? Like from Meta to Microsoft to, whoever from a CapEx perspective, that continues to be the focus, the monetization. Right. And I think that's really going to define the winners.
Okay. Quickly here, Dan Ives, I got January 29th of next year, 26. Okay. 2026.
Oh, yeah.
Microsoft earnings. I agree with you, Dan. Part of the angst here is an information vacuum. What's the information you're going to see at 4:15 in the afternoon, January 29th from MSFT?
I think it's the monetization from Azure and what you see from AI. I think the reality is that 30% of the Microsoft deals are tracking have been accelerated when it comes to AI over the last few months. So as that plays out and the forecast plays out and they reiterate their CapEx, I think it's further validation that, like, when it comes to the enterprise, Microsoft's going to be the core winner when it comes to AI.
I think that to get the nuclear fusion thing over the line, they got to merge Dan Ives' bright pink and bright green jackets together.
Sure.
That'll
get
provide
you there.
the entropy to get us to a successful fusion. Dan Ives, short notice. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Digitally, she's here today with the newspapers.
All right, I want to start with this because we have a few headlines about the Warner Brothers deal. First, you have the Wall Street Journal, right? They're talking about how Warner Brothers wants more info about the use of an Ellison family trust to backstop that deal, because a big part of that trust is Oracle shares. And Warner wants Larry Ellison to give this stronger personal guarantee that he and not the trust is committed to the bid. And then you have the Financial Times reporting that a Warner Brothers shareholder is reaching out to an investor to acquire all or part of its cable TV assets.
It's by CNN.
You could CNN, TNT, Discovery, like all those. It said it's Soo Kim, founder of New York hedge fund Standard General. He's been in talks apparently for buying, investing in the television networks, and he's done TV deals before.
Yep. Well, Bloomberg's Matt Levine's his money stuff column yesterday goes to this whole revocable trust from the Ellison. Really explains it clearly.
What's Matt saying is brilliant.
Yeah, it's basically saying, hey, revocable trust has, it's got gajillions of dollars of Oracle stock, but at any point in time, that can be removed from the trust. And then the trust has got no value. And then you're like, okay, well, where's my backstop, Mr. Ellison? And that's kind of where the Warner Brothers board is here. They're saying we need Mr. Ellison's personal guarantee in some form for this.
Yeah, we got to go. It's Lisa's newspaper segment. But Paul, are we surprised at the, I'm going to say, modest valuation of the traditional TV product?
Yeah, the cable network businesses are being valued at 4 to 5 times.
It's like Teen Sweets.
Yeah, and it's almost, who cares? It's just, again, really? Lisa, Laura Martin from
Wolfe Research cares,
said,
Paul.
Yeah, she just said, shut them down. Just turn them off, turn off the lights.
Lisa, next, please.
All right, this is an interesting look into the housing market. This one's in the Journal, how more wealthy renters are customizing their spaces. And the landlords are okay with it. They even encourage it sometimes. I mean, we're talking about those who spend between $20,000 and $50,000 a month, for a luxury single-family home or apartment. So they spoke with realtors who say the landlords are okay if it increases the value. More and more people are doing it. They gave the example of a 3-bedroom condominium. These owners bought it in Lenox Hill, and they paid about $14.8 million, but their renters pay $50,000 a month to rent it. They made $2 million renovation when they moved into the renters did. So it's showing how much they're putting into it. I don't know.
It's just bizarre doesn't capture it. It's just strange.
They're renting it.
What's the taxes on $14 million property?
Then there's that.
Yep.
So this is more than just throwing a coat of paint on it.
No, it is. It's getting new bathrooms, like redoing the kitchen, like putting up wallpaper, which is tough to take down. So all that kind of stuff, they're just redoing the house to their likings, and the landlord's okay if it increases their value.
There you go.
Okay. That was painful. Next.
It is. And this one, okay, so we talk about birth rates falling, but there's new research out there because a lot of people blame, people want pets and they're doing that instead of having kids. They're pushing the pets around in the carriages and dressing them up like kids. So that's what we're dealing with. But now there's this new research that say actually having a pet can make people want to become parents more. They did this study in Taiwan where the birth rate is one of the lowest in the world. And that's what they're showing, is that pets aren't replacing babies, they're actually preceding them. So it's more like a trial run, I guess you could say, why they have the dogs first and then they have the kids after. So it's not in replace of, it's just
like the kennel fee for kennel fee is like a precursor for child care.
Exactly. So you should have had the pets first before the kids, and then you realize how expensive they are.
The latest battle was, Paul, Should the dogs have the little booties on as they walk around?
Oh, right. Yeah.
Oh, not the
It's chilly out there.
We don't have the booties.
No, not the booties.
We don't do the booties.
I've seen the booties. They're very cute. They're very,
On social,
cute.
I've got some of their sweaters out. Vet bill is very festive, but we didn't go with the booties. The newspapers with Lisa Mateo, always interesting, always entertaining.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.